Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, April 24, 2015. Inside the numbers tonight, we're going to take a look at a quick trade review. We're going to look at the SPY and the E-Mini Contract, crude oil, gold, interest rates in the bond market, and the U.S. dollar. So let's get right into it without wasting any time. Here's the daily chart of the SPY, and basically what we had today was a little bit higher, grind higher. It's an up day. It's a bullish undertone to the market, like I've been saying, so we can expect higher prices at least into the first couple of days next week. How much higher? Well, not that much, but here are the numbers I have, and hopefully it'll be helpful. So on the, I do my numbers on the E-Mini Contract, so we're going to flip over to that. And the E-Mini Contract, there's two upside targets I have. And the first upside target is probably going to be somewhere between 21.18 and 21.20. So that's really only 6 to 8 points up from here, which is equivalent to about 60 to 80 cents in the SPY. That's not that much. And then the second target, which isn't all that much higher than that, but mind you, this is only for the first part of the week. Then I have an upside target of 21, we're going to call it 21.25, maybe just short of that. So let's call it 21.23 to 21.25. Now that is about 12 points from where we are today in the E-Mini Contract, which... And there's a method to the madness here. There's a reason why I'm bringing this up, which is $1.20 roughly on the SPY contract. So let's go to the SPY. Okay. Remember, $1.20 from where we closed today is my upside target that I can see from here. In other words, I can't see anything past 21.23 to 21.25. We may see 21.40 next week. I just can't see it yet, okay? My calculations tell me it's not imminent. But what's interesting is $1.20 from where we closed. We closed at 211.65. And where would that bring us? 212.85, right? $1.20 exactly. What was the high here? 212.97. That's close enough. So we're in the range. That's, 9 cents basically away from the all-time high, and this high that we've been talking about for quite some time. So that's a tracking error. That's essentially the same price, and I didn't do that knowing this number. The calculation put that number out. In fact, the calculation was on the E-Mini Contract, and all I did was recalculate and translate the equivalent up move from the E-Mini Contract to the SPY. And came up with that 212. It's close enough. We're going to call it 212.97. So that's kind of one of those three guys tell you you're drunk, go sit down. When I do calculations and 2 or 3 formulas or 2 or 3 ways to calculate the same thing comes out with the same number, it's usually right. Okay, it's more of a confirmation of the calculation than anything else. So I'm going to say there's a pretty high probability between, let's say, the first 2 or 3 days of next week that we're going to touch 212.97 or close enough on the SPY contract. I don't have any downside targets. I don't really see downside Monday, Tuesday. After that, we'll talk about it. It's not that I'm seeing it. It's just we have to see what the market does and how it reacts on the upside. I think we're setting up. Now, there's probably going to be another pullback before this happens, but I think we're setting up for a blow-off top in the market in 2015. And what does that mean? That means that we could see 100, maybe even 150 points higher, maybe more in the the S&P contract or the S&P 500. It's not conclusive, but it's certainly culminating that way. And we're going to stay on that topic. I'm going to continue to talk about it, and we'll see what happens. But I just thought I'd make mention of it. I mentioned it last night, mentioned it again tonight. I think it's important. That's basically all I can see in the SPY. I've given you pretty much everything I have. Do we have any downside targets? Not really. If we saw any downside next week, we would look for the same numbers we had before. The first number you'd look for is about 210 and a half. which is roughly a little over $1 away from where we are now. But we'll talk about it Monday night. If we get a significant amount of downside Monday, we'll certainly cover it. I just don't see it. The market's not telling me it's coming. Anything could happen. Who knows what's going to happen over the weekend? I get all that. But just use 110.50, and then the 50-period moving average would be the another strong level of support, which is far away from where we are. That would be a pretty significant down day. I don't expect that, but anything can happen. That's a 209 50-period moving average, which is also about the same level as the 20-period moving average. Okay, so let's move on a little bit, and let's switch over to gold. And gold, had a bad day today. Gold was down. And remember the other day I said when I told you that I tapped out of gold after 1200 was broken, I said if 1185 doesn't hold, then it's 1175, and I said, yeah, it's only $10, but it's probably going to happen. Well, today it happened, 1175, and I don't have any lower numbers, but we've got to close above 1175 in order for me to begin looking at another bullish position. I don't like the reaction off of gold. I don't like what it's doing. It's not acting normal. It's not acting in terms of where it should be based on seasonality trends. And so I'm going to leave it alone until the gold market gives me something conclusive that gives me more evidence that I can read it better. When I'm wrong or the market's not doing what I think it should do, it's best to just step aside and take it in, reevaluate, reassess, and either I'm wrong, the market's acting strange, a little bit of both, or none of the above. So either way, I haven't figured it out yet, but when I do, we'll certainly let you know, and we'll get back on the gold train as soon as we can. But for now, no go. Oil. So oil's interesting. Here's the daily chart of the crude oil June contract. And oil is hovering above this top channel here, the resistance line I've drawn in. Now, let's see what happened today. You had a pretty, I don't know, call it a wild day, but what I thought was interesting. Look at where you went today. Up, down, and then at the close you went back up. And I thought that was interesting. What would be the reason that oil would rally for the last half hour of the day after oil pit session has closed after 2:30? So between 2:30 and 4, oil started to get a rebound, and then it put in a kind of like a buy program into the end of the day. See, this is our line again. What that was telling me was that it's fighting this line, and that's bullish. It tells me it wanted to close above this line to put oil in the best bullish possible scenario it could for next week. Now, it's not in the best bullish possible scenario it can be, but the best possible scenario would be a close above $58. I think 58 and a quarter, but we'll call it $58 on an hourly, and then daily close above 58 will probably send oil up to 60 and higher. I'm beginning to calculate higher prices. I think we might even be able to get up as high as $65 a barrel. I'm not talking about by Monday or Tuesday. I'm just talking about on this move up. This is a low as put in, a higher low, a higher low. Here's a bullish pattern. We went high. We consolidated for a few days, and we're setting up for another move higher. How high remains to be seen. It depends on the velocity and how the market trades higher, but I'm beginning to see indications of higher prices than 60. So I'll keep you in the loop on that. But as long as we stay above this line, this is in a very, very, I don't want to say a very bullish position. Over 58 is a very bullish position, but this is bullish behavior, and this is certainly a very bullish pattern. You have the upsloping 20-period moving average. I mean, I don't know how much more you need. You're closing above the resistance point. The market rallied to get over the resistance point at the close. Okay, you have an upsloping trend line here. Don't forget about this upsloping trend line here. Okay, that matters. All right, so you have support underneath the market here. You have the market above resistance here. Okay, it's putting in a bullish pattern here. What else? I don't know what else anybody needs to take this trade. So let's say you wanted to take this trade. What do? Okay, so the textbook trade would be you're long oil, and if crude oil closes hourly and daily below 54.88, you're out. That's the best I can do for you. Other than that, I think it's a long right here for anywhere from $3 to maybe even $6 or $7 on the upside. Don't know exactly how long that would take to play out. It may take through the month of May to play out that high, but nevertheless, that's a good trade. And I think if you're a commodity player and you're interested in the oil play in the oil market, this is a trade you should look at, because this is the bullish setup. I don't know what else to give you except hand it to you on a silver platter. Okay, let's go over to the bond market. We'll look at TLT. TLT was higher today, but that's nothing other than a bounce back from the sell-off we had, and we've got to see something more definitive. As you know, I've been talking the last couple of days. This market's got to play out, put in some kind of a low, and then or give us a definitive signal it wants to go one way or the other before we're able to put together a trade with high probabilities of success. And this is basically opposite the interest rate market. And interest rates, here they are. You know, interest rates were. Let's just look at the intraday chart here just for a second. The hourly chart. And you can see interest rates went up yesterday, pulled back a little bit today. But we'll see what happens. This could be setting up for another leg higher in interest rates, which means a leg lower in bonds. But when we have a trade set up, same as oil, same as gold, I'm watching, I'm calculating, I'm looking. As soon as the market tells me what it wants to do, I'm going to pass on the information to you. It's that simple. Until that time, we leave it alone, let the market play out, let it do its thing, let it gyrate around. Once it picks a direction, it's going to tell us, believe me. Let's go over to the dollar. And the dollar's in an interesting position. And this is kind of fascinating, because if you believe that from time to time, or the dollar will follow oil on the opposite direction. So if we see a dollar rally, you see lower crude prices, and that's basically what happened for the last several months. You had a dollar start to take off, right? You had, let's look at a monthly chart, okay? You had the dollar start to take off in July, August, okay, of 2014. And what happened to crude oil in that same time frame? Let's see if I can get a continuous chart on crude oil. Just bear with me. See if we can get the same type of time frame. Well, let's go to a weekly. Yeah. So same time frame, July, August. Same time the dollar was rallying, crude oil was selling off. Now, if that relationship stays intact, okay, then this is what I think is likely to happen, okay? I think, okay, finally, and I may have entered a dollar trade a little premature, but that's okay, because you know I'm bullish the dollar long term. And like I said before, if we get down into this buy zone, I'm buying with both hands. Okay, I took one position so far in the dollar, and I'm willing to buy more in this zone here, because I'm confident that the dollar is going to go between 105 and 110 over the next 12-month cycle, let's say. So I'm okay holding that for the longer term, which I don't hold a lot of positions for the longer term, very few over time, but this is one of them that I'm going to be willing to hold until it gets to target, because I'm that sure that it's getting there. So here's what I'm trying to say. I have an indication as of the weakness this week that there's more downside in the dollar. And if the dollar comes into this zone on the back of the downside into next week, and the oil-dollar relationship is there, that could be the catalyst for higher oil prices, right? Lower dollar, higher oil prices. I just showed you the chart of oil. I gave you all the reasons to be long oil. I gave you probably 4 or 5 reasons to be long oil. Here's another one. Weak dollar next week may play into strong oil prices or a stronger oil market. So all these things culminating, I'm looking at a lot of stuff. Now, some stuff is statistical, some stuff is mathematical, and this is more of neither of those two. This is more of finesse. This is more of that experience, doing it for a long time, common sense, finesse. What's the market doing? Where's the money flow? What does it look like it's unfolding? How did the market close today? What did oil do at the end of the day? What did the dollar do at the end of the day? Let's take a look. What did the dollar do at the end of the day today? Nothing. Didn't do the opposite of oil. A little bit downtick here, but that's nothing. That's nonsense. So basically no clue there, but there certainly was a clue in the oil market. So I just wanted to make mention of that. I want you to realize that. And, we'll continue to watch it, and we'll talk about it again Monday and see what happens, see how the whole thing unfolds from here. Anyway, I think that's enough for tonight. Hopefully I've given you good, solid, valuable information. Everybody should have a great weekend. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.